Hello, viewers. We are back with another episode on Indian capital markets, different factors influencing it, and how you should think about growing your personal wealth. Um, in this episode, we would like to focus more on the macro factors, what is happening around the globe, and what is the latest that you should consider when thinking about your strategies forward. With that, let me welcome Prateek, who is a
Hi, Gopesh.
guest here. I'm Gopesh from Alpha Quark. Great to get started. Prateek, thanks for joining us today. Uh, Tell us what's happening in the markets. What are the macro elements that are impacting and are likely to impact in the time to come?
So, Gopesh, if you look at the markets, overall markets have been doing pretty well. There has been sudden dip in the market, and that was very, very sudden. All of a sudden, the dip came basically. A lot of people who were on the long side of the market and they were not just holding cash, but they were into short-term positions. They had to suffer sudden losses.
Hmm.
The losses are getting recovered at this point in time. But people may have this question that why does this sudden losses
Hmm.
in market
Yeah.
exactly happen?
Yeah.
Will that continue? Will that not continue? Those
Hmm.
kind of questions people have, right?
Hmm.
Now, there were a couple of things which came into play, and these things come into play every now and then, right?
Hmm.
So you will see that Iran war, there is going to be a war
The,
involving
the
Iran.
the
That
Middle
that
East. Yeah.
the Middle East, right? So that kind of thing basically came up. That keeps coming up. That news basically keeps coming up. Market doesn't really care about that news. Normally, what happens is that market do not care about that news.
Hmm.
Then again, sometimes you would actually see that in market, bad news is good news. Why is bad news a good news? Basically, because let's say the US economic numbers are not that great. Basically,
Hmm.
that basically means that market starts factoring in that Fed will cut rates and they will
Hmm.
cut rates faster than what they are supposed to, right?
Right. Right.
They're the central bank in the US. They basically determine the rates in the
Hmm.
US.
Hmm.
If the rates go down, obviously the economy can get a bump up
Hmm.
because
Hmm.
people can spend more. The interest
Correct.
costs will
Correct.
basically go down, and so on and so forth, right?
Correct.
So normally, what happens is that whenever there is a bad news in the economy, people think that okay, Fed will have to start cutting rates.
Right.
So there was a factoring in that was done by the market that Fed
Hmm.
will cut rates by 25 basis point
Hmm.
in September. That
Hmm.
was basically factored in 2 3 weeks back also.
Hmm.
That 25 basis point rate cut will happen. Fed was kind of giving that indication as well.
Hmm.
Suddenly, when the market move happened, or suddenly when there is a bad economic event that basically
Hmm.
happens, Fed starts giving the indication that they might go and start cutting by 50 basis point, or the
Hmm.
market starts expecting.
Hmm.
Because the market starts expecting, the Fed is basically under pressure that they have to cut rate by 50
Right.
basis point. Right now, if you look at the implied probability,
Hmm.
market probably assigns an implied probability. So the implied probability of rate cut has basically gone up to 50 basis point at
Hmm.
this
Hmm.
point,
Hmm.
right? But even before I go into those details, what exactly happened, right? Whenever I said that bad news is good news, right? A bad news came in that there is a Iran involvement basically in the Middle East that can start coming up. Israel is becoming very aggressive. Then there was another bad news that basically came in that the US employment numbers were not as expected. The
Correct. Correct.
unemployment rate is basically going up.
Correct.
These were these were the bad news, right?
Hmm.
So
Hmm.
market should have factored in that bad news is good news and it
Hmm.
should have
Hmm.
gone up.
Hmm. Hmm.
That did not happen.
Hmm.
Why did that happen? Because mainly because of the factor of yen carry trade. Now,
Hmm.
what exactly is a carry trade?
Hmm.
Carry trade basically means that suppose I get low interest rate in a
Hmm.
specific country, in a
Hmm.
specific jurisdiction.
Hmm.
I can borrow in that jurisdiction. I
Hmm.
can go to some other jurisdiction. I
Hmm.
can invest that money in
Hmm.
that jurisdiction and
Hmm.
try to make some money
Hmm.
based on the spread.
Hmm.
Let's say I go and borrow in Japan. Let's say I was an investor
Hmm.
who had the access to Japanese debt market. I
Hmm.
can raise capital from Japanese debt market.
Hmm.
So let's say I go to Japan. I raise rates at I raise money at
Hmm.
2% because the Japanese central bank offers very very low interest rate, maybe
Hmm.
0.25%, 0.5%. So
Hmm.
even the rates in the market is very very low. Let's
Hmm.
say I raise at 2% over there.
Hmm.
I bring that money into India or I
Hmm.
bring that money into US.
Hmm.
I deploy that money in a very safe instrument, let's say Indian bonds, government bonds yielding around 7 to 8%.
Hmm.
Or I go to US and I basically invest in bonds over there, which is
Hmm.
yielding around 5% or
Hmm.
4% basically, right? And then I make the spread.
Hmm.
The only way I will make a loss in this trade is if the currency has a lot of fluctuation, right?
Hmm.
So let's say the Japanese currency suddenly becomes very strong. in that case I may start making a loss because I have to get that US dollars out
Hmm. Hmm.
and
Hmm.
INR out, and I have to
Correct.
convert that into Japanese
Correct.
yen
Correct.
to pay back that debt,
Hmm.
right?
Hmm. Hmm.
So only in that case I can start incurring a loss,
Hmm.
right?
Hmm.
So this is one of the trade or the carry trades which has been going on in the world for years and decades and whatnot. Basically, it has
Correct.
been
Correct.
going on, right?
Yeah. I mean, ever since the Japanese have been in expansionary monetary policy because of like the inflation concerns, deflation concerns actually. This has been for forever, it seems.
Yes, yes, indeed. So it has been forever, basically,
Hmm.
almost like ever. Now,
Hmm.
Japanese central bank has suddenly given the indication as
Hmm.
well as started acting on
Hmm.
raising interest rate.
Hmm.
Basically, they raised interest rate two times.
Hmm.
This time, when they raised, the market got very panicked. That you know what? Now Japanese currency is going to appreciate, so I
Hmm.
need to get out of my carry trades,
Hmm.
basically,
Hmm.
right?
Hmm.
And nowadays what happens in market is everything is knee jerk, right?
Hmm.
People do not get time to reflect, people do not get time to think. Basically, suddenly market will have a knee jerk reaction, basically,
Hmm. Hmm.
which is what happened on Friday. So if you look at Friday, the second of August, that is what happened. Suddenly, market started getting a knee-jerk reaction that
Hmm.
there is a Japanese central bank who has basically raised rates,
Hmm.
and this can cause a lot of unwinding of the carry trades.
Hmm.
Japanese yen started going up very
Hmm.
suddenly.
Hmm.
JPY to USD started going up
Hmm.
suddenly, and that led to people panicking that okay,
Hmm.
what is going to happen
Hmm.
now? Fundamentally, if you think about it, is there a fundamental reason? Like, how would you interpret it as an investor, right? How would you think of this kind of an event as an investor?
Right, right. No, so given that the carry trade has been such a staple for such a long period of time, when there is a sudden movement, when there is a sudden increase in the interest rates which Bank of Japan is offering, I can understand the sense of unwinding those carry trades and that impacting markets across the globe because I know that Japanese investors have invested a lot of money in the US capital markets, and not just that, even Australia, Mexico, India, there has been a lot of investment. So that reaction impacting capital markets across the globe and triggering some of the fears of Black Mondays, which have happened in the past, seem to come true. So I can understand that, and at the same time, that balance between need for central banks to balance inflation on one side and unemployment on the other side, which is what the Fed would need to look at. Probably we'll talk more about it as we go deeper, but I can understand how this sudden increase, this sudden change from Bank of Japan can impact capital markets not only in US but also across the globe.
Yes, yes. Let me in fact share my screen, and you can see what exactly happened, right? So if you can see this, this is the chart of USD JPY, USD versus yen. Uh, if you see this, it has been an uptrending chart, which basically means that USD is strengthening and JPY is weakening,
Mm-hmm.
which was a very, very sweet spot for investors, right?
Hmm.
Whoever
Hmm.
is the carry trade investor, they're basically getting USD, which is having
Hmm.
higher value.
Hmm.
They are getting out of JPY, basically.
Hmm.
They are getting into USD,
Hmm.
and they're making a lot of money. They were
Hmm.
making a lot of money. Suddenly, what happened? Look at this, July, then you are sometime 11th of July, it started going down, basically, right? And then suddenly in towards the end of July, basically, if you can see this, this is 29th of July.
Hmm. Hmm.
There is a big drop that is happening,
Hmm.
right?
Hmm. Hmm.
31st of July, you can witness a very big drop that
Hmm.
happened in
Hmm. Hmm.
USD, which means that JPY started strengthening, right?
Hmm. Hmm.
At this point, market started panicking. They said that, you know what if I have to get out of all my carry trades, basically?
Hmm. Hmm. Hmm.
There was a huge panic on 2nd of August. If you can see this, 2nd of August, basically, there was a huge red candle
Hmm. Hmm.
and people started panicking at this point in time,
Hmm.
even in stock markets.
Hmm.
This was happening for some time. If you see this, for almost 1 month, this
Hmm.
kind of a decline was happening. This
Hmm.
was
Hmm.
secular.
Hmm.
But suddenly, when there was a huge drop, market started panicking.
Hmm.
And on Monday, this was the Monday's drop, actually, if you see.
Hmm.
Monday, it was again a follow through, basically.
Hmm. Hmm.
At that point, the markets thought that, okay, something is wrong. let's
Hmm.
get out of my positions or
Hmm.
carry trades. And because there was such a sentiment about carry trades that okay, carry trades are unwinding,
Hmm.
because of that, all markets started selling.
Hmm. Hmm.
It may be that yes, there are some Japanese investments in India, there are some Japanese investments in Australia, there are major Japanese investments in the US, but at the same time, markets started panicking that okay, all the carry trades are getting unwound.
Right.
Let's just get out of my positions, basically.
Yes.
Whether or
Yes.
not it impacts the Indian investors, people thought that okay, let's get out of the positions for
Hmm.
now and
Hmm.
let's wait and watch to see
Wait and
what is
watch. Yeah.
happening,
Yeah.
right?
Yeah.
So this
Another
is
Sorry if I
sorry,
may,
go
right?
ahead,
Another
please.
interesting thing which I observed is that it like you would expect if people are pulling out money from US markets, they would probably invest that money back in Japanese stock markets. But that day, Monday, the Nikkei also crashed. I think it was of the order of 10-12%. The market lost value, one of the biggest crashes they have seen. And that was such an interesting thing that people, when they are withdrawing their money, they are not actually putting it in Japanese economy. And as I was looking at it, what I understood is that because the Japanese markets have been strengthening for some time, they are actually at an all-time high. And because of that, when people actually pulled in money, they chose not to invest in Nikkei at an all-time high level, which further created that panic scenario and all markets, including Nikkei, crashing on that day. So if you look at the trend for Nikkei around those dates, even there was a fall which was observed.
Absolutely, absolutely. So if you think about it, it's not really positive for the Japanese market also,
Mm-hmm,
basically,
mm-hmm,
right? Because if you think about the Japanese market has been appreciating because the yen has been depreciating,
hmm,
right?
hmm, hmm,
Because they have a weak currency, they were able to export a lot of things. They are an
hmm,
export
hmm,
primary kind of economy. They
hmm,
do import a lot of things, but they have major amount of exports.
hmm, hmm,
So from that perspective, it was not positive for them that yen is continuously strengthening,
hmm, hmm,
and that became very, very evident, and
hmm,
market
hmm,
started falling suddenly.
hmm, hmm.
So
Yeah, yeah. So, so, so we understand how this impacted global markets, right? But could you zoom in a little bit on Indian markets? Give us a little bit of landscape of how relevant this is for India and how it impacted our markets.
sure, sure. So before I go into Indian market, let me give you some more context basically about the global markets. So if you think about US, right, and this is one of the holdings, you can see the holding statement basically,
Hmm,
right?
hmm.
So you can see that who are the major foreign holders of treasury securities. This is the debt, US debt
Pratik, could you
instruments.
zoom in a little bit?
Sure, sure.
Yeah.
So if you
Yes.
can see this, these are the major foreign holders of the treasury securities, which are the debt, US
Hmm, hmm,
government debt
hmm,
actually.
hmm, hmm.
You can see on the top it is Japan. Every month on month, you can see on the top it
Hmm,
is Japan basically,
hmm,
right? So if there were major impact and people are really liquidating money, I would expect these numbers to go down basically.
hmm, hmm,
On 06, then we have to see 07, we have to see 08, what exactly happens over here. We
hmm,
have to see these numbers going down.
hmm,
If these numbers are going down, then we will have an important observation to make that
hmm,
Japan is no longer investing, or Japan is getting out of US treasury market
hmm,
because of the fact that their treasury markets are becoming more attractive, or
hmm,
because of the fact that their currency is basically appreciating.
hmm, hmm, hmm,
If that does not happen, if these numbers are staying more or less flat, then I would say that the impact of the carry trade, or like the potential impact of carry trade getting over, or slightly reducing, is not much basically.
hmm,
This is something that I would infer. I would have to take a look at the data. Once the data comes, I'll come to know what is really happening. Is it
hmm,
that the carry trade is really getting unwound, or is it just a market hype basically?
hmm, hmm, hmm.
Right?
Okay. So you think that this might not be that widespread? It could
Correct.
just be a splash that happened and might not stay. It might not widespread. The contagion might not spread.
That's right. That's right. Yeah. Yeah.
Hmm.
Yeah.
Hmm. And I also heard some of the indicators which Bank of Japan actually, uh, when they observed all these things, all these dynamics in the market, they also came out and said that the hikes, they would only continue in the high. They would only continue with interest rate hikes if the markets warrant so, and they're able to reach the outcomes which they desire. And the interplay of dynamics. For example, if they keep doing this, it would not even be good for Japanese markets, and they would be mindful of it. So I think there's expected to be better coordination, and they'll probably slow down if at all they want to continue on this trend.
Right, right. Yes. So
Yeah.
in fact, there is an expectation from the central bank, Japanese central bank, that they will not be doing rate hikes so aggressively,
Hmm.
because
Hmm.
they have also taken note that
Hmm.
Japanese economy is getting impacted,
Hmm.
and there are a lot of things that are happening in the markets, right? So they
Hmm.
will probably go slow. They will not go immediately. They will
Hmm.
go slow on this.
Hmm.
That is
Got it.
expected.
Got it. So now maybe you can now touch upon the impact of this more in the Indian context. So could you touch upon that as well?
Yes, sure. So if you look at the Indian markets, Nifty is one of the major indicators, right? Nifty is kind of the top 50 stocks. Let's take a look at that and let's see what is happening in Nifty, right? So just a second. Give me 1 second,
Mm-hmm.
Rajesh. So let's just take a look at the charts of the Indian market, right? So if you look at this, I'll just zoom in over here.
Mm-hmm.
You can see that on a 6 month basis, right? Nifty has done pretty well. You can see that there was a big red day on the election results. After
Mm-hmm.
that, market has recovered. Market has basically gone to all-time highs. After the Japan event, this kind of event that happened on 2nd of August, it basically created a low. It went just below 24,000.
Mm-hmm.
It basically started coming up after that.
Mm-hmm. Mm-hmm.
It has been stable, and after that it has started coming up basically. So market has absorbed the impact of the news. Whatever news has basically come, market has already absorbed the impact of that. So market is not really not too much worried about the impact at this point in time, because overall if you see, the Indian economy is doing well. Indian
Mm-hmm.
economy is growing. uh, there is a government that has already come in the center. The election uncertainty is over at this point.
Mm-hmm.
There is no prospect of a hung parliament or such kind
Hmm.
of things.
Hmm. Hmm.
There are tax buoyancy is very high in India at this point. You can see that GST numbers are going up, all the corporate tax collections are going up, personal income tax collections are going up, which
Mm-hmm.
basically indicates that the economy is doing pretty well.
Hmm.
The earnings of the companies are also increasing because of that.
Hmm.
The earnings are increasing. A lot of companies are doing well. The big companies in the market, they are also able to play this, and even the smaller companies are able to play this,
Hmm.
which means that there is a lot of positivity about the Indian economy.
Hmm.
And that positivity is getting reflected in the Indian markets in terms of the valuations.
Hmm.
The valuation premium that some companies are commanding are way higher compared to what we used to see 3 years, 5 years back, right?
Hmm. Hmm.
So the valuation premiums are higher. Even then, the market is going up. The market is not really falling.
Hmm.
Whenever there is a fall, that fall is always absorbed by the retail investors or by FIIs or by somebody. The fall is getting absorbed,
Hmm.
right? Which basically means that the market is still looking positive.
Hmm.
Market is in a positive trend. The trend is not going anywhere. And as some people have said, that trend is your friend basically. So maybe we should just take that trend as the friend and we should ride the market.
Hmm. Got it. Got it. Right. So, so I will write this down probably somewhere. Trend is your friend, and time to ride the market. But just to also be a little cautious, would this carry trade come back to haunt us? What is the outlook on that?
So there are a couple of things. One thing is that the Fed is going to cut rate in September. That is something which is more or less certain at this point.
Mm-hmm.
Uh, that cut will be 25 basis point or 50 basis point is the only question.
Hmm. Hmm.
Now, market is saying that it is going to be 50 basis point.
Hmm.
If
Hmm.
it is a 50 basis point cut, then it is going to have a positive impact. Whenever there has been a Fed cut, in the past, uh, there has been spillover impacts to the emerging markets like
Hmm.
India, right? Sometimes the cuts have also happened at times when recession has already started, right?
Hmm.
So if you look at 2007, 2006, those point in time, in 2007, whenever the Fed rate cut started, the markets also started falling.
Hmm.
But those were things which were completely different, actually.
Hmm.
Those
Hmm.
were not the times when uh, Fed was already actively managing the markets, actively managing the economy. They were doing to some extent, but those times were little different, basically. At this point, I do not expect that Fed rate cut would lead to a recession, basically.
Hmm. Hmm.
If anything, Fed rate cut would only be a positive thing, basically.
Hmm.
Now, again, carry trade, whether it is going to impact us or not, that is something that we have to see. We have to see that what exactly happens with the treasury securities, for example.
Hmm. Hmm.
This is one of the biggest investment that the Japanese investors make,
Hmm.
or people who have taken debt in Japanese yen make into US markets or other markets, right?
Hmm.
If this shows a trend of 10% down in 07,
Hmm.
again 10% down in 08, then yes, the yen carry trade may come back and haunt us.
Hmm.
But till
Hmm.
the time that data is available, I'll not have any specific way to say if it is going to come back or not,
Hmm.
or
Got it.
or the news is going to come back and haunt us or not. I would
Got
say
it.
probably not, but let's see. Let's look at the data.
Got it. Got it. Great. Thanks a lot, Prateek. Very insightful discussion. I think as investors, we need to always keep monitoring what are the macros, how other economies are doing, and how that could impact capital markets across the world. So, thanks a lot for making it easy to digest, easy to understand, and eventually that would help Indian investors build wealth by being mindful and considering all these factors in planning out their investments. So, thanks for your time. We look
Thank
forward to
you.
the next episode of similar discussions on how you should plan your investments and what are the things to watch out for.
Thank you, Gopesh. It's always a pleasure to talk to you.
Thank you. Bye bye.